Can I please request everyone to start taking their seats? Can I please request all of you to take your seats now? Ladies and gentlemen, we want to start the next session so that we can actually end time. The time you now is what you take away from your lunch break, so if that is an incentive. Great. So like I mentioned before we took this short break, the first plenary session is a policy dialogue on thriving together, microfinance and sustainable climate solutions. Before we start the panel discussion, I'd like to call on stage Syed Mohsin Ahmed, who is the CEO of PMN for the scene setting. Mohsin, can I introduce you? We never do your introductions. Okay. So Mohsin is the driving force behind the PMN, which he joined in 2000. Some of the accomplishments of the PM under his leadership include the Microfinance Credit Bureau and the Disaster Risk Management Fund. Mohsin is also the chairman of the South Asia Microfinance Network. So Mohsin, can we now please have you on stage for the scene setting?
Acha. Assalamu alaikum ji. So I think we touched upon or we discussed this very critical issue which is being faced by the microfinance sector in Pakistan. We know that climate is changing. We have seen that last year with the kind of rain that happened in Sindh, and we have seen that this year also when we had heavy rains earlier on, and then August became very dry, and so these are changing the overall crop patterns also. So how is this affecting the microfinance sector? We know that it is definitely affecting. We are now going to discuss today in this session what are some of the key solutions and what are the problems that we are facing. But before we go into that, let me take you through, set some scene around this. What we have seen over the last 24 years in the finance industry in Pakistan. So from some in 2001, when we were at 20 or 30,000 active borrowers to 9.3 million active borrowers. And this 9.3 million, I know, if we dig deep, go into the granularity of that, there are questions around multiple borrowing, there are questions around real microfinance loan versus nano loan versus so many other things. But in whatever, we have reached 9.3 million active borrowers with a loan book of around 550, 560 billion rupees. But we can very clearly see that between 2005, when we had the October earthquake, and at that time the loan book was very small. If we look at this area which was affected in 2005 and juxtapose that with the current loan book, the risks will be high if that similar kind of a earthquake hits us. So starting from there to super floods of 2010 and the glacial meltdown that happened up north in 2011-12, the floods in Chenab in 2014, and then we had a lean period between 2014 and 2018 when we had a drought in Thar, and that followed with a swamp in 2019-20, the pandemic, and then the floods in 2021, and coupled with that the overall Ukraine-Russia war and the macroeconomic conditions in Pakistan. This has impacted microfinance industry. So what has been the typical relief that we have received up till now. Rescheduling has been allowed by both the regulators for both MFBs and MFIs. We have also seen provisioning relaxations. Write-offs have happened. And what we have also seen is because of the availability of digital platforms and the cash transfer program BISP, cash transfers have happened to some of those clients who have been affected during this crisis. So immediate cash transfers have happened. And I think in the morning we did talk about the importance of immediate, like from Zen, he did talk about that rather than repaying a bigger amount 9 months from the crisis, it is much better to pay maybe a lesser amount, but that happens immediately. Oh, नहीं तो एक स्लाइड रह गई है जी मेरी. Is there anyone जी? Okay. हाँ. So what are the solutions? And that is something that will be discussed in the plenary that Louis is going to chair. And Louis is an expert in this area from the World Bank, global expert. It is important that that fund is put in place. And it's not just the fund, it is the overall facility that looks at both preparedness and then availability of resources at the right time. What we also know is that because for a couple of times when these floods have hit the country, we have provided the disaster need assessment report to the World Bank for the microfinance sector. And what we have seen is that initially there is definitely a huge crisis that happens. And that is the time when you need the regulatory support, but you also need liquidity immediately for not just the clients, but also the microfinance organizations. So availability of such a facility will be critical as climate we see change is happening, and as we continue to grow. Because if we don't grow, because if we don't have such a facility, what we have seen is that there is contraction happening in areas which are affected, geographical areas, and kind of products that are being offered, they are being reduced because of this risk that is happening. Insurance coverage, so the ecosystem becomes very important. So who should be part of it? So like Salimullah Saab was talking about that microfinance organizations, through PMN, the Apex, PMIC, the two regulators, SCCP and State Bank are very critical. But similarly, in this ecosystem, it becomes very important that we are interacting with climate experts, that we understand and communicate to our clients what are the risks going to happen this year or next year because of the kind of climate that is going to be there in the country. Similarly, insurance companies and interacting with the insurance sector is very critical in making this a success. I think also support will be required to build the internal capacity of microfinance organizations. I was at we actually were hosting a South Asian conference in London a couple of months back in July. And what we heard from the Indian network was, or the Indian microfinance organization was that now interestingly the literacy that is being discussed is not just about financial literacy, it's also digital literacy, but climate literacy has become very much part of the agenda. And donors that are coming into and providing support to the financial inclusion industry, they are investing a lot into these three literacy programs, especially climate literacy. So I will end here, and I will now leave it to Zainab to take it forward. Thank you very much.
Thank you so much, Mohsin, for setting the scene. I would like to invite the session chair for this plenary, Mr. Louis Alton, who is the Senior Financial Sector Specialist at the World Bank. Mr. Alton has over a decade of development experience spanning various geographies. His area of specialization is integrating disaster-related fiscal risk into public finance frameworks. Currently, he leads the Pacific Catastrophe Risk and Financing Initiative for South Asia, Southern Africa, and the Pacific. Thank you so much, Louis, for being part of this panel. I'd like to now call each of the panelists to the stage one by one. I'd like to start with the only woman on the panel, Ms. Khalda Habib, who is the Executive Director at the SCCP. Madam Habib, brings with her extensive career which has centered on international cooperation, regulation of securities, corporate law, and regulatory structures for financial markets. Thank you so much for joining us today, Ms. Habib. Next up, I'd like to call Mr. Musharraf Mahmood Khan, who is the CEO of Daman Support Program. Musharraf Saab brings with him 18 years of experience in the microfinance sector. He was co-member of the team working on the transformation of Daman from an MFI to an MFB. Thank you so much for joining us today, sir. Next up, I'd like to call Mr. Haris Chaudhry, who is the Chief Operating Officer of the Mobilink Microfinance Bank. Mr. Haris is a seasoned banker with a focus on digital finance and using technology to help low-income households leapfrog into financial inclusion. Before his role at the Mobilink Microfinance Bank, he was the CEO of USF, which had an impressive outreach of about 40 million beneficiaries. Next up, I'd like to call on stage Mr. Jahanzeb Khan, who is the CEO of Finca Bank. Jahanzeb Khan Saab joined Finca after an illustrious career at JP Morgan, Deloitte Consulting, and Telenor Bank. As the Chief Strategy and Transformation Officer at Telenor, he led a wide array of award-winning products and services. Thank you so much, Mr. Khan, for joining us today. And lastly, I'd like to invite Mr. Muhammad Ali Ahmed to the stage, who is the Managing Director and CEO of EFU Life. Ali, of course, has over 29 years of insurance experience. He has been a great advocate of microinsurance and always supportive of innovations for the bottom of pyramid when it comes to insurance. I say this with personal experience of working with him and his team. I will now pass the baton on to Louis to lead the session.
Ladies and gentlemen, distinguished guests, Assalamu alaikum. It's a pleasure to be here, and I'm very honored to host this session on the microfinance sectors and climate solutions. We've heard, I think, throughout this morning, a big endorsement of the sector, even though there were some critical questions raised on nanoloans, I gathered. But we heard overall a big endorsement of the sector and its importance for fostering growth and poverty reduction in Pakistan. But we also heard that a recurrent and ongoing and probably worsening challenge is climate risk. That's obviously a global challenge, but I think Pakistan is one of the more exposed countries. And I don't think I need to explain the impact of that. I think it was very vividly seen by everyone last year during the floods. And we know that similar events, or possibly even worse events, will recur. So I think this session is very timely, and I'm very honored to have such a distinguished panel with me on the stage to discuss it. Maybe we can discuss roughly two broad things. One is, how does the sector, or in what way does the sector support its borrowers to adapt to climate change? So in what sense does it foster maybe new technologies being adopted in the agricultural sector, I don't know, more resilient housing standards? How does the sector itself interact with its clients to make them more climate resilient? And then secondly, I think it would be great to discuss how can we collectively contribute to the sector itself becoming more climate resilient? In other words, what does the sector need? What does it do to deal with climate shocks itself, so it can continue to provide lending during shocks, after shocks, and potentially, especially after shocks, to help its clients? So I think roughly we can structure the discussion around this. It'd be great to hear on what is happening in the sector, but also what are the challenges, what is needed, etc. So we're slightly unbalanced in terms of how we're seated here, but maybe I'll just we can just start from the left and maybe go to the right with questions, and then we do it the other way around. So maybe to start, let me again pose this question of how, in your experience at the moment, is the sector helping its clients to become more climate resilient? What measures are being financed for climate adaptation? If there's anything innovative, new that's happening, it'd be really interesting to hear about that.
Can you hear me? Hi, Louis. Thank you for giving us the opportunity to talk about climate change. I think it's one of the biggest risks, as we've seen in the last 3 years, which has impacted this industry tremendously and the country overall, and the segment that we service, which is the poor and the poor active, as I see. So, in my view, there are a couple of things we need to do in order to make the segment more climate adaptable. The number one thing is awareness amongst our employees and the segment that we serve. So just like we do financial and digital literacy, and overall the industry has done tremendously and done thousands of those sessions across the landscape of Pakistan. Just our institution has done over 40,000 digital literacy sessions. I think what we are looking to do is incorporate the best practices around climate adaptation and incorporating those into those literacy sessions so we can raise the awareness amongst the segment which is most likely to impact or has already impacted. So that's the number one thing. I think it starts with awareness and consciousness that this is a real issue. And it's not that it has only happened once. As we know, Pakistan is amongst the top 10 vulnerable countries to climate change. It's a question of time that, God forbid, it's going to happen again. And we need to be prepared on a war footing for that. So the number one thing is to have the awareness and those practices. Secondly is around the product suite diversity and embedding the climate adaptable changes into a product suite. For example, embedding insurance into the existing products is something to begin with that every one of us should do, because it's a question of time. Like we said, if the customer prospers, then we prosper, right? And if they get impacted, then it's a question of time with the lag that we will get impacted, which we've seen in the last 3 years. So when we talk about the impact to the industry, which we are seeing right now, it's because the customers who we serve haven't been able to recoup from the damages we've seen from COVID and from flooding. And that is the impact. So we need to make sure they are protected. And if they are protected, they'll have the repayment capability, and that will help enable us to be more sustainable. So that's number two, around embedding the climate adaptable changes into our existing product suite and introducing other new product suites also, like Zan mentioned. Now there are weather indexed insurances, right? Which are available in the market. It's good to hear that Pakistan has followed. It's being done overseas globally. With cyclones, there are instances, examples of Caribbean where 50% of the payments, insurance payments, were made in 7 days and 100% within 14 days. And here we are talking about 9 months where the crop cycle is already missed, right? So we need to enable those best practices into our product suite as well in order to prosper. Then the third thing is around what we talked about, the capital and the liquidity. We've been working with PMN and multilaterals for a long time about the climate fund. And lo and behold, in these discussions over the 10 years, we've already seen catastrophes hit our sector, which have hit us. So I think in order to be better prepared for next time, which I don't see, we are still not prepared well for the next catastrophe, and it's going to take down the entire industry. We need to have that cushion to handle the next shock, which doesn't exist today. And that is critical for us, right? So that's the third thing around, is to have the necessary cushion and the liquidity and the capital to handle such shocks, which is going to be critical for the industry and for our customers to survive. So we continue to lend in the areas where it's most needed versus taking a risk-averse approach, which all of us unfortunately are taking when the demand is the highest right now. Right? So those are the three things, high level, which comes to my mind, which are necessary, which we can do, which some of us are already doing, but it's not at the forefront of our priorities. But it's going to be critical that we start to prioritize, every one of our institutions start to prioritize, just like we prioritize on financial literacy, digital inclusion, financial inclusion. I think now the climate inclusion and the climate adaptation needs to be at the forefront of all of our priorities. Thank you.
Thank you very much. So we heard about awareness, product suites, so innovative products, including on the insurance side, and liquidity, roughly these three products. So maybe if your colleagues want to expand on this, and maybe also if there's anything on the lending side in terms of products that you want to talk about, please feel free, sir.
Can you hear me? Yeah. So my fellow panelist, I guess, has structured in a very in a nice manner that he has highlighted the three major issues that we need to work on. And I totally agree with him as like, the awareness part and the training part, and we need to realize that this is an issue. And a lot of people, obviously in the microfinance sector which we deal with, are either underprivileged, underbanked, or they do not have that kind of awareness about the climate impact. They still feel that this is something that has just been happening and it might not happen again. Just to give some facts, Pakistan produces less than 1% of the carbon emission, and according to the World Climate Index, we are the most, I guess, top 5 vulnerable countries. And unfortunately, nothing has been done so far. So to cover that, I think we need to have a short-term, medium-term, and long-term strategy to that. In short term, obviously awareness, we can have awareness, we can have certain trainings, we can tell them. But in medium term, what we can do is that we can leverage technology. We can have different kind of technology which can inform different farmers, telling them what kind of cyclones or what kind of flood or what thing they expected in certain period and what measures can be done. And along with the medium term, I think there's a lot of crop insurance, there's a lot of rain insurance. These are the products which are being used in different markets, especially in Africa, and also in one of our neighboring countries, Bangladesh. And Grameen Bank is one of a very good example who'll be focusing on sustainable fishing and also agroforestry. So these are the things which we can do in medium terms. And in the long term, yes, we need to work on the, we have to work on the solar panels. We have to work on wherever we see the carbon emissions can be reduced. For example, the water pumps which are being used in agriculture, and our economy is based on GDP is approximately 40%. And most of the microfinance banks which are lending right now is more on agri products, either directly or indirectly. So whatever measures that can be taken, either using solar panels or leveraging technology, which is IoT sensors and all of those things, that can help us, in avoiding these kind of challenges. And also making important is that we make part of our product suite, that these products are being sold, they are being informed, and the features are translated into benefits to the farmers. Because that's where the challenge is, where the literacy rate is not very high. As I just mentioned, the crop insurance is something we really need to work on, because from last 2 years we have seen, in the last year we've seen in the Sindh, and this year we have seen in the Southern Punjab. So we might be expecting something happening in North, but if we start working on this from today, so we might be able to avoid some damage next year.
Thank you very much. So again, I think technology, leveraging technology in the medium term seems to be super important. And also in the long term, this suggestion around financing, I guess adaptation measures, solar panels, risk reduction measures is really important for climate adaptation and resilience in the long term. So thank you for that. Please.
Thank you. I am also seconding the Mr. Janzeb. They also told us that we are facing 3 types of these challenges in these sectors. That first of all, the awareness of the customer and communities and groups, they are not awareness the climate change. This is a major challenge for the forthcoming situation. Then second one was the diversified products we can introduce in the market and marginalized communities for this purpose, and also the affected communities and persons through transfer the money and rehabilitation projects for through technologies like ADC channels, and as well as branchless channels, as well as the third thing that told us that the insurance compensation. Pupils are not much more awareness as the insurance, climate insurance. The other things, we are also working at women-based organizations like Daman. The people just awareness of our traditional products, not awareness about the climate resilience products. We shall introduce all these products through our regulators like financial literacy, digital literacy, as well as climate literacy. We shall arrange through regulators and investment companies and groups back-to-back session for these communities to enhance these types of awareness of things.
Thank you very much. So again, I hear awareness a lot, so and climate literacy, that's a key point clearly. And we've also heard about insurance. I think all three have mentioned this so far. So we have a representative from the insurance sector here. Maybe we can hear more about what the insurance sector itself is doing. We obviously had a speech this morning as well. So
Sure.
please.
Thank you. Assalamu alaikum, everyone. I would like to thank the Pakistan Microfinance Network. Thank you to you as well, Louis. So just to bring this in context in terms of what kind of insurance solutions could be available or are available, and how insurance can actually support all the efforts which are happening related to microfinance and microinsurance. So we already talked about Pakistan being in the top 10. I think it's number 8 in terms of the global climate risk index. And now the two main climate-related events in Pakistan, floods and drought. I think these are the two main events. So we have excessive rainfall, we have melting of the glaciers, and then obviously rising temperatures. So whatever insurance solutions are to be designed or are available need to focus around, I would think for Pakistan at least, these two kinds of events. So now when we look at the spectrum available, we have solutions. We've spoken about crop insurance, we've spoken about livestock insurance, even things like infrastructure insurance. Floods have destroyed homes, families have been impacted, so can insurance solutions actually help in rebuilding of homes as well? But then you have on the other side, you have life insurance solutions and you have health insurance solutions where loss of life or anything to do with the health factors is taken care of. But also I think in the morning session there was talk about parametric insurance solutions being available, but my opinion is that a lot of pilots have been done in Pakistan, and I think we see a level of innovation coming from some general insurance companies who've actually taken the risk of offering these solutions. But these pilots actually have remained small-scale pilots only. What we need to see is that how can they be upscaled? So if a pilot was done in a certain district of Pakistan regarding crop insurance, or does that insurance company have the capacity, the financial capital to actually upscale that to the entire country? Now that is where I believe government intervention or support, I would say not really intervention, but support needs to come in. Now, we see examples of countries where disaster risk funds have been created, but as was discussed in the morning, these funds are primarily there to provide liquidity to the microfinance sector in times of climate-related events. But if Pakistan was to go in that direction, there are these 4 or 5 insurance solutions that can actually be coupled with the disaster risk fund. So if the fund is on a sovereign level, perhaps a collection of insurance companies could get together to provide, let's say, cat cover solutions linked to that fund, to provide life insurance solutions, health insurance solutions. Crop insurance obviously is something that's directly related to what happens after floods. Livestock, again, that is something, loss of livestock was seen in last year's floods as well. Now, what is important to understand is that the frequency of these events is increasing. So if a few decades ago, a large-scale flood was a 1 in 10-year event or 1 in 15-year event, it is actually becoming a 1 in 5-year event now. And all the research that is happening on this region, especially Pakistan, the research institutes say that this is just a tip of the iceberg. Pakistan actually is at the crossroad right now, and these floods and droughts are going to become even more severe as we go forward. So therefore, there is a need that at a national level, and obviously we have from SSB as well, and we were just chatting before this panel, that work is being done in that direction, but that work will only be complete when the insurance sector is taken on board. And I would think that a consortium of the insurance industry working along with the regulator to move in the direction of a disaster risk fund is, I think, something that Pakistan needs right now. We've seen examples, Bangladesh was quoted, and Bangladesh is a flood-prone, they've been having floods for the last 50 years, every second, third year, and they went in that direction. We've seen countries in the African region where drought is one of the problems, and national level efforts have been made to actually support the microfinance customers as well, but the general population which is prone to these kind of events. I think Pakistan has been late. We've spoken about it in conferences such as these multiple times, but I think if there is regulatory drive and we are moving in that direction, we probably need to do it very, very quickly. I would say that the insurance sector is going to support, such an initiative by the government, whether it is the non-life insurance sector or the life insurance sector. We all can play our part in terms of the spectrum of the solutions that we can provide, right from life insurance, health insurance, disability insurance, accidental insurance, to crop insurance, livestock insurance. The whole spectrum is available. It's just to create an enabling environment for the industry to take that step forward and then work with the government. I feel that Pakistan, unfortunately, we are going to see more of these events happening in future, and as a country, we are just not ready. The government is, the moment as such an event happens, the government's priority is relief and then rehabilitation. That is what they focus on. We rely on donor agencies to provide us support to help us with all of this. But in parallel, if we had a disaster risk fund coupled with insurance, that is going to take care of the livelihoods of the people which has been impacted. And the fund can help them get back on their feet while the government is actually focusing on relief and all the other efforts. So that is my take, that I think it is time that we move in that direction of a national level effort to work on these kind of climate induced events, and the insurance sector is behind the government and the regulator to support them in all ways possible.
Thank you very much indeed. So we heard about, you mentioned various things, including insurance, pilots, they don't scale. You also mentioned that it's important to have the right enabling environment, and maybe this is a good segue to turn to you, and we have the SECP represented to ask you about, as a regulator, what do you see can be done maybe going forward to strengthen the sector against climate risk, to make it more resilient? Liquidity was discussed as well, so maybe this is something you can talk about, but also on the insurance side. What do you see as key steps maybe for the country to take in terms of making it more climate resilient for the sector?
Thank you, Luis. I think the industry has very well highlighted the need for regulatory as well as liquidity support that is required by the industry in the time of this climate risk that they are facing. SECP, from the very beginning, since the time we have taken these within the ambit of our regulatory regime, we are supporting to develop this microfinance segment. Initially, we kept regulatory regime quite on a lenient segment, and not much enforcement was done, or even the regulatory standard was kept on a lenient side. But a couple of years back, certain regulatory standards were further strengthened. We supported the segment during the period of COVID as well, where, as mentioned by Mohsin, all requisite support that was required in the form of relaxations in the regulatory framework for renewal and rollover of the loans were allowed to the microfinance segment. Also, the wholesale lender was allowed to enhance with certain enhancement in their limits to facilitate the microfinance institutions to cater to the needs of the industry and the customers that are needing the funding at that time. Last year, the floods in 2022 affected the microfinance segment quite badly. and the non-bank segment was around 24% of their operations they were hit, particularly by the floods in the Sindh area. We were in talk with the international financial institutions, including both the World Bank and the ADB, to extend requisite support to the industry. And I think with the help of World Bank and ADB too, most of these requirements were met. The credit lines that are residing with the State Bank, their target or their focus remain on the non-bank as well as for the banking segment of the microfinance, and they are meeting these needs wherever is required for rebuild and rehabilitate the household during those flood areas. I think wherever the requisite support is needed for any regulatory intervention in the form of change in the regulation or the support that we can collaborate with the donor institutions or the ministry, we are available to help and work with the industry. And I think it's a good news that I just heard that the climate risk fund that was in the initial stages is almost wrapping up, and with the help of World Bank, the industry would be able to make use of these funds available to address their needs to address these climate risk effects that we'll be facing in the future too. I think wherever the industry requires, we are available for them, and requisite support will be extended in the form of regulatory changes and the support through other regulator as well as the donor agencies.
Thank you very much indeed. So we heard a lot about regulatory relief and measures on the regulatory side, but also this climate risk facility has been mentioned in the morning and on this panel a few times. So I want to speak about this a little bit in just a second, but maybe before I go there, before I'll ask you to indulge me, maybe I can ask a couple of very pointed questions to the panel. And one is around, and this is a question I have personally, so around pricing. So I wonder to what extent the sector can provide incentives for climate adaptation to its clients. So, for example, if your clients take measures to reduce risk to become more resilient, do you reflect this in your product prices? Is it something that can be thought of? Would it make sense? Or if they have insurance, for example? Several of you said that insurance pilots have been done in Pakistan. There's some interesting innovation happening, as we heard from Zain this morning. But they don't often scale these initiatives. So what are the challenges there? Has it to do with price as well? So I wonder what the link is between what you're offering, the price you're asking, and climate adaptation and resilience measures. And if people who take resilience measures, do they get rewarded somehow?
Initially it was a challenge creating that awareness among the unbanked and privileged, because they are the small borrowers. So paying a little extra cost on anything would have a burden on them. So creating an awareness by telling them this is something which is going to have a long-term benefit, in which the solar powers, which has really affected them in terms of in a positive manner, by using different water pumps which they used for farming and all other techniques, which is the modern techniques of farming, which are being run through electricity, are being converted into solar. And that's what MMB and Mobiling Bank is trying to do, and make an important part of the product suite, because this is something which we really believe that the farmers, until they cannot reduce their cost, their growth will not grow, and their business income would not be sufficient. And then obviously if the business income is not going to grow, their capacity of repayment is not going to be as good as it could. So this is something which is been working on. It's taken some time, but now I guess the realization is there, and understanding of the farmers and also small borrowers is there. As far as the insurance is concerned, that is something is a slight challenge right now, but I guess in the last 2 years what we have faced in floods, especially in the south and in the South Punjab and on the Sindh side and Balochistan side, I think now the bit of understanding awareness is coming over there, and that is something which we would like to push. And we want to collaborate with different insurance companies so we can come up with those products, so we can help them in case of anything happening and can avert the damage. And that has happened in the past, and they have been really burned. And that's why when this cycle gets disturbed, so obviously the whole economy is being suffered, especially Pakistan's economy, which is mostly on agriculture, and they are being hit by different products. And then obviously in the current scenario, there's a lot of, in the global scenario, there's a lot of shortage of different commodities. So it also has an impact on our nation GDP. So this is something which we are trying, and we are working with different insurance companies to work with, and I'm very confident this thing will work out.
Thank you very much. Any other thoughts on pricing, insurance, why the take-up doesn't scale so far, and what can be done to change that?
So I think that's where we'll need to experiment on several ideas. And pricing is an issue if you look purely as if it in an isolated manner versus the potential impact that we've seen in the prior calamities. So I think rather than pricing it separately, embedding and embedded insurance is something which we need to experiment with versus passing the burden on completely to the customer. And that's where we'll need to figure out some innovative ways of doing it, leveraging data, like you mentioned, technology, and then embedded insurance into the products. Then from a pricing, another way to do it is, if you see it's an insured product, so we need to work with the regulators and the state bank around potentially looking at risk-weighted assets of the products which are backed by insurance, right? If a product is backed by insurance and those loans are backed by insurance, then perhaps we should work with the regulators on figuring out how the risk-weighted assets could be changed on insurance-backed products. But again, like the Deputy Governor mentioned, I think there's a long ways to develop that trust between the industry and the regulator. But these are some of the things which we need to work with in collaboration with the insurance companies on leveraging embedded insurance, risk-based pricing, and then thirdly, on potentially over longer term looking at risk-weighted assets of insurance-backed products in working with SECPs of the world and the regulator.
Thank you very much. I'm not sure if you want to react to that in particular.
He mentioned about insurance products embedded, offered to the by the microfinance institution in the form of embedded products. So I think we have some examples where certain institutions are offering such embedded sort of finance products to the agri clientele. One of the example is the Neem Financial. They are offering their small loans embedded with the agri loans facilities, whereby the weather forecasting and insurance products are also available in the form of micro and crop and cattle insurance. So whenever, means though the existing framework facilitates offering of such products, going forward, I think if further need is required, we are available to work with the industry, insurance industry, as well as with the microfinance industry to facilitate offering. So,
thank you very much. Please.
So I totally agree. I think if you look at in all the developed markets where microinsurance or climate-related insurance solutions are available, embedded insurance is one of the, I would say, straightforward direction to go into, because the microfinance institution is offering its own product, which is offering a loan to the customers, but then embedding various types of insurances along with that, especially in markets where the financial literacy level is low, and you cannot really engage with customers to explain what is being offered beyond a certain level. Embedding insurance into the whole proposition, the whole customer journey, just makes it easier to offer that product and scale it up as well. Just coming to that one point you raised about rewarding responsible behavior in terms of climate solutions, let's say. So we already have such an example, at least on the life and health insurance industry, where if a customer opts to live a healthy lifestyle. So for example, is physically active, eats healthy food. So there are already products available in the market where incentives are provided, discounts are provided, or additional benefits are provided to that individual for his or her life or health insurance policy. So that same concept can actually be transferred or transposed into, let's say, if a microfinance borrower uses solar panels to produce electricity, so he's trying to live a greener approach towards his lifestyle. And perhaps, this is food for thought for the insurance companies, that discounts could be given on insurance products just because that person is contributing to the climate. Now, there are examples, there are pilots which have been done, especially in the African market, from what I know, where premium discounts or additional benefits are provided if a microfinance client actually is using greener methods of producing fuel, let's say. So I think that's probably an idea which once we scale up the crop insurance schemes or other climate-related insurance schemes, responsible behavior can actually be rewarded in terms of incentives. So this, I believe, is a new idea which the insurance industry could look at, because we have an example of such a structure on the life and health insurance side. So it could be adapted for these kind of products as well. Thank you.
Any comments on this issue? Sorry. No? Please.
As Ali just mentioned, that microinsurance can be embedded with microfinancing. But I think one thing that insurance industry should be looking into is the constraint that the client would be facing because of the front end load of the microinsurance product. So I think blending that with the requirements and the demands of the industry or the clientele would be, I think, make a suitable fit to advance and further expand this product range.
Thank you. Maybe this discussion makes me think of one topic which was also, I think, mentioned by the organizers we could discuss here, which is about impact investing, ESG, this whole topic of mobilizing finance to support the sector when it comes to climate adaptation. And these things, they require financing, and there are investors internationally and also in Pakistan, I understand, who are willing to put money on the table to support climate adaptation solutions. So I wonder if any of you have any thoughts on this topic, any experience, and maybe also from the regulatory side, if there's any measures to try to mobilize capital that is specifically focused on this topic. Maybe.
Separating that SECP is encouraging the industry to opt on a voluntary basis would definitely encourage the industry to opt this social impact assessment within their existing framework, and this will encourage the lenders to extend the lending facility not only from the commercial banks but also from the wholesale lender to those entities who are better rated under their separating methodology. So to this route, we encourage the industry to opt for the social impact assessment within their policies, internal policies, and then they go on a setup so that this impact assessment can be further penetrated within the system.
Thank you very much. On the industry side, do you have any thoughts on the ESG impact investing issue?
So some of the organizations, like including us, are purpose-driven with the mission of social impact in addition to the sustainability of the organization. And we regularly do surveys around the impact we've created in our mission towards poverty alleviation. And climate resiliency is now one of the major components of that mission. I think what helps an impact investor is when they see the outcome and the result. And via these, like you've seen, where it's reflected that each loan that we've given out, in our case, has created more than 2 jobs, right, helps the case. So as we bring out these climate resilient surveys and bring it out in the market to help attract the impact investors, it will help. For example, there have been studies done by OECD for Bangladesh and Nepal, which showed an overlap of existing microfinance activities towards climate adaptation to an extent of 40% overlap of win-win of climate adaptation to the microfinance industry. So similar activities, some of the surveys and activities and data collection we need to do in order to reflect on the baseline and create the baseline of how much are we helping today in moving towards climate adaptation, and then what's our goal with attracting an impact investor to this market, and raising that bar and measuring it year over year is going to be critical for us. I think it starts with measuring to begin with, and I don't think we are actively measuring the climate adaptability in any of the surveys that I've seen from a microfinance perspective. So I think the first issue is start measuring, create the baseline, right? And then we can measure the progress over time.
Okay, so thank you very much. I think the issue of measuring impact is obviously huge. There's a wider issue around data, also on climate itself. I think of climate risk. One thing that we're trying to do is help with the modeling of climate risk so that the sector has better information around that, and I can talk more about this in a minute. But I think overall, the need for data around climate for the sector is super important, and hopefully this is something that collectively can be tackled going forward. I'm sure any other comments around this issue around impact investing, ESG. Otherwise, I'll maybe quickly, if you indulge me for a second, talk a little bit about a climate risk fund that has been mentioned a few times this morning, that we are trying to think about at the World Bank, and we're trying to put in place, hopefully, in the coming year or two. And the basic idea of this instrument is really to set up effectively an emergency liquidity facility. And we heard that liquidity is one of the big issues. Now we heard awareness is a big issue, liquidity after shocks, and also insurance. But the concept that we are developing at the bank at the moment is really tackling, at least in its initial stages, the issue of getting cheap liquidity to microfinance banks and institutions after shocks, so they can keep lending after the shocks. Because one concern we have is that there might be some disintermediation going on in climate-affected areas. So what we hope to do is to effectively capitalize a facility which then provides liquidity lending to microfinance banks and institutions after specific shocks, and also to backstop this facility with some kind of insurance mechanism, kind of macro-type parametric insurance mechanism, so that if there's extreme shocks, the facility can provide grants as well for capital support. So this is very roughly the idea that we have. We have a mission this week and next week where we will talk to several of you and to also government counterparts and the regulators around this idea. And we really hope this is something that we can make happen in the next couple of years. I hear the issue around insurance products and microinsurance as well. So we also, we have had a few conversations with insurance sector representatives, and we will keep thinking about this issue, but the initial thrust of the work is really around this liquidity provision facility. But I think it would be great to hear maybe once more from everyone on the panel, and maybe during the Q&A as well from people in the room around whether liquidity facility is something that's needed, and what else you need. I mean, we heard data, for example. I talked about risk. To what extent do microfinance banks and institutions have models around climate risk that they use? To what extent do they have access to climate risk information? Technical assistance. I'd be very curious to hear from the panel on anything that they think would be useful to provide or to get support on from obviously government, but also from institutions like the World Bank and other international donors. I'm not going to pick anyone, but please, so I think I'd love to hear from all of you.
Yeah, there is a dire need, I think, of creating measurements, and that's where the technical assistance from institutions and experts who are already working in this field, because we ought to realize that the microfinance industry specializes in providing access to capital. They're not climate experts, and we should not pretend to be climate experts. And that's where we failed in the past, where we pretend like we become agri-experts. So we need to partner with the experts who can help us create those benchmarks so we can start to measure to begin with. So I think technical assistance is going to be critical to at least start create that survey or benchmark across the industry, and in working with players like us, I think everyone will be forthcoming in working with multilateral organizations to enable that. That's number one. Secondly, I think we talked about the aftershock, right? As if we are waiting for the aftershock to happen and then we'll provide the liquidity. I think it's critical that we start to work on preventable measures. And that's where we need wholesale funding from multilaterals to enable us, the industry in itself, to spend on things like we talked about in the first phase around climate literacy, on climate adaptation, on providing access to renewable energy, right, which we are part of the Paris Agreement as a country, also with lofty goals as well. So I think working on a liquidity model for aftershocks is of course important, which we've spoken about. I think right now is the time to talk about how to prevent it from happening, and investing in those, because investing in preventative measures is going to be much less costly than handling the aftershock from a multilateral perspective. So my plea to the multilaterals would be that this is the time to invest in climate adaptation versus focusing on the aftershock as we speak.
So maybe just a follow-up question on this. You're suggesting direct investments, or also like earmarked financing to microfinance banks, institutions, so they can lend for investments in climate adaptation?
So it has to be public-private partnership through the industry. I would never suggest a direct-to-consumer. So it has to be we are the industry, where it's encouraged, where there's wholesale funding available for climate adaptable literacy products, suite, right, data, instruments, IoT, etc., to our customers. We are embedded finance, we are embedded insurance, be it other new products for housing finance or rehabilitation, but it needs to be on a proactive basis versus a reactive basis, which we still seem to be talking about.
Okay, no, thank you very much. I think the point is very well taken. Please, if there's other thoughts on this from the panel, I would love to hear from you. About maybe some reactions on the facility that I just mentioned, but what else we can do collectively to support the sector?
I agree with my fellow panelist talking about more proactive rather than reactive, and also the technical assistance side. But access to this technical assistance is being discussed a lot, especially on the climate side, globally. But the focus on Pakistan is very less. And as I just mentioned earlier also, that we are in the climate index, we're the fifth or sixth, maybe the top climate index, which have been hurt by these climate changes, and we produce less than 1% of carbon emission. So I think access to impact funds will only work out when these at globally level, when the multilateral organizations are going to realize that there is a challenge in Pakistan. When you look at the macro force Pakistan, and then we can further define into the microfinance space. And then until we have not been able to figure out the impact of the last floods, which different multilateral organization has tried to work out, that what exactly impact has been made when it comes to the Pakistan overall economy. There's been different numbers coming out, there's been different commitments made by different multilaterals and different countries to work on them and rehabilitate those areas which have been badly affected by these flood-affected areas. But in the practical, when we talk about the numbers that has actually come in and actually hasn't made an impact, it's not being there yet. So I think we need to work on this. We have to create that awareness at the multilateral and also at the global levels, talking about Pakistan challenges in terms of the climate. And then once we then the second step would be coming into different sectors. And I also agree it has to be a public-private kind of a partnership where we can actually analyze how the consumers can be handled if anything goes wrong, and what will be the way forward to prevent that so it does not happen again. Yeah.
Thank you very much. So big plea for better monitoring and evaluation almost, and preparedness as well is a key issue. I think on preparedness, I just want to emphasize that a climate risk facility, in our view, in some ways is preparedness. It's financial preparedness for shocks, right? So, but I fully hear you that you need to have preparedness in a physical sense. You need to obviously reduce risk and prepare in other ways for shocks as well. But the financial preparedness to be able to react after a shock with financing is also very important. Any other thoughts on this issue? Anyone?
I think enough sensitization is there within the industry. We all have recognized that what we faced last year, flood and its impact. So requisite steps have been taken in the right direction by the regulators, the donors, agencies, and the ministry. As we are mentioning that the risk fund is about to be established. So I think going forward, it is important that requisite linkages between all stakeholders is developed. The need of awareness raising is much highlighted at this forum. I think going forward, the industry associations, the PMN, the Pakistan Insurance Association, they can work together with the stakeholders, including the regulators, to address these gaps that are currently prevailing in the industry, so that the ultimate client, the poor person, is effectively using the facilities available to them.
Okay, thank you very much. So maybe, be conscious of time, I'll maybe ask my panelists if there's any final remarks you want to make to the audience. Please feel free to do so. Any pleas you have, any ideas you want to share. Otherwise, I would suggest that we open this for a Q&A session. So if there's any questions in the audience or comments for the panel or for your colleagues, then we can do that now. Any final thoughts from the panel, or shall we go to Q&A? Okay.
Charanji, thank you so much, esteemed panelists, for a very invigorating conversation. Let's go to the audience for questions. What we'll do is we'll take 3 questions together, and then we'll bring them back to the panel. So the first one is from Naveed Saab, who's right here. Sir, please.
Thank you. Louis, for your reference, this is Naveed Khan. For your reference, insurance within the context of the financial sector is perhaps the least talked about sector, and also from an inclusion point of view. So that's a missing link, and I've told Akif Saab, the chairman of SCP today as well, and the deputy governor, that we need to figure out how to sort of blend them. Number 2, the banks don't price risk, they price liquidity. That's the unfortunate part. As far as the impact funds are concerned, I just got back from a global impact investor conference, and none of them have really some sights towards Asia to a larger extent. It's been more an Africa story. I'm delighted to hear what World Bank is doing, because I think this is the need of the hour. My request to my fellow bankers, particularly in the MFB space, is that you guys, unfortunately, are not receptive towards insurance. The only way to do insurance in the microfinance sector is to blend it. You have to bundle it. Nobody will pay you, because our experience has been at PMIC with our partners that wherever there was a subsidy, it worked. The minute the subsidy dropped, everybody walked away. So my request to all of you is that make it part of your cost. Don't pass it on at this stage till we get the level of maturity. And my message to my friend in the insurance business is, please price yourself from a micro level insurance program perspective. You can't price it at any other level, otherwise it'll never take off. So really what we need to do collectively in PMIC, what we have done with our partners, wherever there is a livestock loan, we have said you have to bundle insurance into it, and if you don't, then we would not fund you for that particular segment. So really it's incumbent upon all of you to bring in the insurance that will protect your end customers and also you, because we're in this soup together because of that. So really that's the message that I wanted to give. Thank you.
Thank you. Thank you so much, Naveed sir. Do we have any other questions?
Gee, I have a question.
Ji, Mohsin sir.
Okay, so I would want to take a step back in terms of who, like Naveed Saab talked about insurance. I think when we engage with the government on a disaster risk fund, and as Ali was saying, that coupled with that, there has to be an insurance consortium that work with it. But there is an agency called the NDMRF, the National Disaster Risk Management Fund, which was set up through support from ADB also. But they have not been able to provide the kind of support that we would want for microfinance sector. Now, as we do these discussions, I know that the World Bank team is here to have those discussions. How do we manage the NDMA and the NDMRF? Because number one, how do we manage them? Number two, if this goes into a program with the Ministry of Finances that you would have to discuss with them, they take a very long time in concluding any discussion. So as we discuss this disaster risk fund, we need to address that particular organization also and dealing with them.
Great. Thank you so much, Mohsin Saab. Do we have any other questions from the audience? Could you please raise your hands? All right, I don't see any hands, so I think if we can address the first two comments that Naveed Saab made. In terms of the microfinance practitioners that we have on the panel, I think one of the questions was addressed to you, and it was, on how you can actually up the ante on the insurance piece, because it's very, very weak. And also his comment on subsidies, if you want to address that. And then the second comment, I think, comes to Madam Khalda and Ali, which was on insurance companies revising their pricing. So what does the regulator want to do on it, and what is the what are the insurance practitioners doing on that? And the second question, I don't know who it could be addressed to, but it's on the NDRMF and how the NDRMF can become more effective. And I think the broader question that Mohsin was alluding to was, how do we deal with the bureaucracy when it comes to any kind of risk management funds? So we can start with the microfinance practitioners, if that's fine, Louis, and then you can, then we can go to the insurance, and then you can probably address the question on the NDRMF. Yeah, thanks.
So from a banking perspective, microfinance, I would completely agree. We haven't done a good job in the past on providing insurance products, and that's why I suggested embedded insurance, because we cannot be selling it as a separate unit and pricing it, because looking at it separately in isolation it will never pay for itself, because you cannot anticipate a disaster and put an ROI against a disaster which is going to happen when we see it. So I think embedded insurance is going to be critical, where we price that into our whole cost structure to avoid the type of issues we are seeing in the industry today, by the way, right? So that is a proactive kind of approach that we can collectively take to do it, and we are starting to do it in our product suite. Yes, it's going to take time, and all the microfinance players will need to be bought in, but you'll see, I think, more traction in that direction, with especially some of the products that insurance companies need to do. And on your third point around pricing the insurance products for not the commercial banks versus the micro insurers is going to be critical, because you cannot pass on the same pricing that you pass on to the commercial bank to the micro insurers also in the beginning. So it has to be volume based versus the quality upfront. So that's going to be critical. But I agree with all of your points that the onus is upon us to embed versus costing it separately.
Naveed Saab rightly mentioned about the insurance, and I think we also have to look at this insurance just not only for the consumer perspective, but also an insurance for the bank. I think this is more important because, right now the NPLs are growing and will continue to go the way the inflation is going and the interest rates are there. So I think insurance needs to just not only be looked at the consumer, it has to be looked at the bank's perspective, or also if you look at the overall numbers, that's going to help and save the microfinance bank institution. And as you said, that it's not been done the way it should have been done. I think now the focus is coming towards it. And the pricing element, again, has been a challenge because the insurance company is still taking the insurance premiums of microfinance bank is more or less the same, which is similar to commercial or other retail banks, which is not going to fly. So I think the incomes of the insurance income, that also has to be addressed at the bank level and also at the consumer level. That's how it's going to be fly, and that's going to make an insurance a viable product for the bank and for the consumer. Yeah.
So I'll just take the point about the pricing of the products. I think in the morning when Zen spoke about it, the insurance industry has gone through a learning curve in the last few years. So if you take about 7-8 years ago, the products we offered, the benefits, the structure, the pricing, it revolved around our, what we would say, our non-micro customer, our main sort of customer segment. But over the years, I think as the insurance industry has engaged more with the microfinance sector, and we have understood the sector better, what you would see is that the last 4 or 5 years, the product structures, the product limits, the pricing as well, all of that has actually aligned itself more with the needs and demands of the microfinance sector. Also, I think the moment you embed insurance into the microfinance customer journey and the product, and because of that, the insurance company is able to achieve economies of scale, so automatically the pricing becomes volume based. And the last few years we've seen embedding insurance into the journey, customer journey has happened, and that if you look at where the pricing was a few years ago and where it is today, you would definitely see that it's more aligned. I'm not saying that there is what I'm saying is there is still room to actually bring it down even further, align it further. One thing that we've seen is that at times when a microfinance institution starts to act like an intermediary, so the cost of the intermediation also starts to come into the pricing. Now there, so we have the cost of the risk, and we can try and minimize that by having better quality data, access to data resources. We can price ourselves better, but the moment you have an MFI acting as an intermediary and wants to build up an X% cost on the risk price, which then gets passed on to the customer, then obviously that becomes expensive. So I think it's probably both sides that need to be looked at. The insurance sector has recognized the need for being more price competitive, for being aligned with the needs and demands of the sector. But at the same time, I think the cost of intermediation is one of the factors where we've had some regulatory intervention to limit those costs. But I still feel that the customer segment we are serving, the cost of the intermediation can still come down. And again, it's a commercial conversation that happens between the MFI and the insurance company. But by embedding it, I think the cost of intermediation can come down quite significantly. And the moment we see scale coming up and economies of scale working in our favor, there's no reason that the pricing cannot be further aligned. So I think it's been a journey, and you're totally right that if you looked at 7-8 years ago, it would be different. But today, we've moved in that direction where the products are more aligned in terms of the industry's demands and needs.
From the regulatory perspective, I think you mentioned two things. First was the bundling of insurance products with the microfinance products, and second was the pricing of the insurance. I think we encourage entities, microfinance institutions, to diversify their product range and make a bundled product in the form of insurance product as a part of their micro-lending products. This will definitely enable them to expand their outreach to the much needed poor people who need their funding and financing from them. On the aspect of pricing, we mostly and generally don't intervene in the pricing of the industry. But I think the recent was one of the examples that I think much quoted in the first half by the State Bank too, the nano lending, where SECP as a regulator intervened and put the cap on the lending, cost of lending that they are charging. Though our experience is that even the State Bank has not intervened in the pricing of the, not only the microfinance, but also the nano lending that the EMI institutions are doing. Generally, we encourage that through competition, pricing should be lowered. And over a period of time, definitely, if the insurance companies see the benefit and the a business case that these products will be offering to them, bundling the insurance with the microfinance, going forward, definitely over a period of time, the cost will definitely be reduced, but this will remain as an industry-owned commercial decision at this stage. Thank you.
Maybe just briefly on the NDRMF. So, we speak to the NDRMF, and I think we'll speak to them again. I think the NDRMF is a much broader institution in terms of its mandate, but obviously if there's any way that we can leverage that or that can realize synergies, we will do that. But the climate risk fund that we are trying to set up is really, it's much more focused on the microfinance sector. But yes, I think it's important to try to understand, obviously, existing initiatives around climate risk and funds and make sure that if there is synergies, that we can use them.
Great, thank you so much. There are two more questions. There's one at the back over there, and then there's one on this table. So we take both of them, and then we.
Assalamu alaikum. I think I'm audible. Yes.
My name is. Introduction, be please kara dejiye.
Yes, my name is Ahmed Bilal Siddiqui, and I am from Bahria University, Islamabad. So I am not from the banking industry, so my question would be a layman question. So I hope you would get it. What model should we follow? Like we are talking about the 10 countries which are affected most by the climate change. So what preventive model should we follow from out of these countries? Any of these countries have adopted that model which is ideal for to prevent climate change. So can you mention any specific country to follow? The first part of the question was that, and the second part is that all the private sector representatives are here, and we have the regulator here as well. Private sector representatives are worried about the climate change and the preventive measures we should be taking about the climate change. But we are unable to see any ministry representative, like climate change. We have a climate change ministry, but we don't see any climate change ministry representative here. So would it be better that we would have a climate change ministry representative and we can plan a roadmap? There is lots of discussion about cohesive and coordinated effort. So is it possible that we can, it's only possible if we have a ministry representative here as well, so we can plan a roadmap for that as well. So that is what I wanted to say.
Thank you so much. We'll take a question here from the table over here. Usher, if you could quickly please come.
Assalamu alaikum. Thank you, Danab. My name is Mumtaz Iqbal. I'm the Chief Operating Officer of Kutch Foundation. I would first like to share a bitter reality because I've been listening to all these discussions. I mean, this is my opinion that perhaps as a sector we are not ready to take risk. We are not very much creative or flexible, and we are not client-centric when it comes to client resilient solutions. Why? If you take the recent example of flooding in Sindh last year, I mean, how many institutions were there who were ready to reschedule clients' loans, or who were ready to lend to their clients? Because I think the last question from Luis was regarding the importance of ongoing liquidity for clients in climate hit areas. We normally look at ourselves, so we are self-centric. Now, my question is that without waiting for a donor or without waiting for a technical assistance, I mean, can we do anything to begin with? I mean, a little flexibility or a little solution for such areas which are prone to climate risk. I mean, or will we keep waiting for a donor or for a technical assistance, or is there anything that we can do within our system to provide some sort of solution to these communities which are prone to climate risk?
Thank you so much. So I think the questions are very similar. The first question, if I were to reiterate, was what kind of models have been successful in dealing with climate change across the world? And if anyone from the panel, Louis, you can see, if anyone can answer that, is there a model that can be emulated, for example, for Pakistan? I think the second question or a comment was on the missing representative from the Climate Change Ministry. I think Louis and his team have been working with the Climate Change Ministry. It was just a scheduling conflict that they were not here. The last question, I think, is more about a model that exists for microfinance institutions that is not external to the microfinance institutions that could be emulated. So if we could have answers to these questions. So a model for a country that's done really well for climate change, or a model for a microfinance institution across the world that's done really well to deal with climate change. Those were the two questions that came in. Does anyone want to take a swing at them?
I mean, maybe I'll the question of what's a good model for Pakistan to emulate in terms of the facility we're trying to create here. It's a tough one because I'm not sure if we've seen models which particularly target the microfinance sector and which try to de-risk the microfinance sector as a whole, as we're trying to do here, that we've seen elsewhere. But I think we can learn lessons from other countries, right? So I mentioned that the facility we're trying to set up is a liquidity facility to provide liquidity after shocks. So there have been models in other countries where similar facilities were set up to provide liquidity to SMEs. So the mechanism is quite similar, but it wasn't targeted necessarily at the microfinance sector, but we can learn from those. So, I'm thinking of examples in Africa, for example, in Rwanda, they created a liquidity facility for SMEs, and there's lessons to be learned there, also on the modeling side of the shocks itself, actually. And I mentioned that this facility that we're trying to set up here is going to be backstopped by a parametric insurance mechanism. And again, there are many countries actually which have done this, where they put in place what we call a sovereign insurance mechanism which pays out liquidity very quickly after shocks. So this has been done in several countries. For example, in the Philippines they have done this, in the Pacific Island states have done it. It's done a lot in the Caribbean because they face big shocks from storms. So there are lots of lessons we can incorporate and learn from there. But I think this kind of combining these two mechanisms and making them specific for the microfinance sector is something quite innovative, which as such we haven't seen elsewhere. But I think one area where you can learn as well a lot is on the insurance side, actually. I think a lot of countries have experimented with climate insurance, including index insurance, parametric insurance for climate shocks. In the region, India, Bangladesh have done a lot, but also beyond the region. This has been a topic that has been fashionable in some way actually for, a good decade, if not more. I think there's some heartening lessons there, but there's also some, reasons to be cautious about some approaches which were taken. Because we see a lot of the same challenges elsewhere that you've mentioned actually here. One is of scale, and one is of willingness to pay for insurance solutions, right? So we've seen a lot that pilots often work quite well, they're subsidized, they're small, but then there's challenges around scaling. And then this question of how do you actually sell insurance? Do you bundle it with other products? Do you do it by itself? And I think bundling is very important. I think that's an international lesson that you all are aware of, but we see this in other countries. And I think it's also very important to be aware of some of the risks which come with index insurance, right? Because sometimes the index doesn't work, and there's an event where people expect a payout, but there's no payout, because the index that you use as a trigger for the insurance payout does not capture the actual event. So there's a lot of things to be learned around how we actually construct indices and products which work hopefully well. So I hope this answers the question partially, but again, specifically what we're trying to do here is quite innovative, but building on lessons from other countries anyways.
Great. Would anyone else want to take a swing at the questions from our practitioners? All right, great. Thank you so much, panelists, and thank you so much, Louis, for this expert panel. We'd like to present mementos to each of our panelists, unless you want to do a sum up. Louis, do you want to do a sum up?
No, I think, I just want to thank everyone for the discussion. We had a very rich discussion. I definitely have some takeaways from this, which we will use and consider as we keep working on this. I also hear you around the pricing. That was an interesting point, so thank you for that. No, just thank you very much, everyone. I really appreciate this, and thanks PMN for hosting us.
Great. Thank you so much. So Louis, if you could please step forward, and I'd like you to pass on mementos to each of the panelists. We'll start with Khalda Saiba. If you could just come to the front of the stage, yes? And we will have the ushers come up a bit faster. Thank you. Can we please have Ali come on for his memento? Musharraf Saab, can we have you please? Can I please request Haris Chaudhry Saab to please come and get his memento? Mr. Janzeb Khan, please. And we would like to call Madam please on stage to come and give a memento to Louis for his expert chairing of the session. Thank you so much. Thank you. So I am the bearer of very good news. Lunch is served. We will see you all back in this hall at 2:30 for the next plenary session. So you have a good lunch break. But please be on time for the 2:30 session so that we can actually continue this good wave of finishing our sessions on time and not making you stay post the end date for today, end time for today. Thank you, everybody.